Hello and welcome back to this 4-part series on funds. This is the third video in the series and this is on exchange traded funds, 2 examples. So I'm going to go through first a ETF that invests in stocks called Amundi World SRI and the second one that invests in bonds, the Vanguard Eurozone Government Bond ETF. So to start off with Amundi, I'm going to go through some of the important things to look for and reference what we learned in the last video about how ETFs work. So you can see from here, this is just a snapshot of the website. It's the Amundi Index MSCI World SRI. Forget the last few acronyms for now. So we learned last time that an index is this portfolio of stocks that's been put together by a third party, and this you can see it's MSCI, a big organization. The index is called the MSCI World SRI, and you remember from the video on ethical investing that SRI is socially responsible investing. So you can tell here that this ETF is tracking the index which is MSCI World SRI. And some other things that might be familiar from the mutual fund video. You can see the ISIN, the identifier of this fund. It's also got a code, which is a similar thing, WSRI, to be able to buy it. Then the NAV, which is the actual price of each share at the moment. You can see is 59 or so euros. Then the AUM stands for assets under management, the total amount that they have to manage. That's about 600 million. And the final thing is the charges, you can see 0.2%. So pretty low. That's how much they charge you with the money you invest. And you can see what they do. They're replicating this index, and it tells you a bit about what the index is. It's exposure to large companies with outstanding ESG ratings. And there's the ones that exclude nuclear power, tobacco, thermal coal, and a few others. So that's what they're investing in. And to go back to the ESG side, the ethical side, you can look this fund up, and this is using MSCI's database of ethical funds, and you can see that of all equity funds around the world, this is in the 96th percentile because such a high proportion of its stocks have a AA or AAA rating. And so it's a pretty, as these big funds go that are investing in a large number of large companies, it's on the ethical side. And you can see though what it holds, and this is the information you can find through this fund's website. So these are the top 10 holdings and their percentage weighting, and that will be because that's what they are in this index, the MSCI index. And you can see altogether there are 384 holdings, and they have some pretty big household names: Microsoft, Walt Disney, Pepsi, Salesforce, McDonald's. And you can see these companies, they're not necessarily purely ethical companies, but they're ones that they're probably not so bad, or at least trying to do some good things, and therefore rate highly on the ESG screening of MSCI. And from the performance point of view, these guys have done they've done pretty well at this index. So the index has returned since 2007. This is including the financial crisis of 08 and 09, and even this coronavirus now. It's returned about 6% a year. It's actually done better. This is the blue. It's done better than the yellow, which is the general stock market, not including the responsible screening. So that's this ETF's performance, and a bit more information about it here. You can see the way you can buy it. It gives you, because it's an exchange traded fund, of course it's on a stock exchange, so it gives you the ways you can buy it. It's on 4 different stock exchanges, so it's in Paris, London, Germany, and in Italy. So you could choose which one you want to buy it on, and in any case, the NAV, which is the price you have to pay for each share, is about 59 euros. And the final thing to see is it's got a risk barometer, like all these funds have to show, and it's a 5 out of 7. And most equities will be probably a 5 or higher. And this one, because it owns so many companies, we saw 384 holdings altogether. The risk is relatively low for a stock fund because you've diversified so much and you're in such large companies. So that's Amundi, the stock fund, and this is Vanguard, and they have a bond fund. So this gives you access to buying bonds of European governments, and as you've been through in the past, you wouldn't yourself be able to buy government bonds. So this is a useful fund to give you this exposure. And because they have so much money altogether, you can see they have total assets on the right. You can see at about 690 million euros. They can go and buy all these bonds, but for us, with a small amount, we then don't have access to them. So this gives you access, and you can see what the fund's doing. It's passive management, like all ETFs, and they're tracking the performance of what's called the Bloomberg Barclays Euro Aggregate Treasury Index. And there's a lot of words, but simply it's an index that has a lot of large government bonds in it. So this fund simply buys the bonds of that index to replicate it. So you're buying just government bonds if you buy into this fund. Some other things to consider is we talked about share class previously and mutual funds, and that's in this case you can see here this particular share class, and in the description it says it's accumulating, meaning that instead of paying you out the dividends that these bonds are paying or the interest that the bonds are paying, they hold it for you and reinvest it, so they keep growing the size of this fund. And that's one share class. You could also buy distributing, and this particular share class has 284 million, it says, so you know that the distributing share class would be the difference between the total assets of 690 and that 284 million. And we'll go through that in more detail in a later video. So what's in the ETF? It shows you some details about it here. They have 379 bonds. These are government bonds, and they closely resemble the benchmark of 413 bonds. Some more information about the bonds, which we don't need to go through now. You can see that the securities on the right, so there's actual bonds they own: Italian government, Spanish government, German government, French bonds. So that's what's inside this ETF, and you have exposure to that by investing in it. So in terms of performance, the ETF has performed fairly well. It's gone for the last 3 years, 3.5% a year. And you can see that the benchmark, which they're very close to because they're just simply following it, that's the index, has been going for 10 years or more, and they've done 4% a year. So you can assume that that's a long-term kind of performance of a fund like this, if that fund had been going for longer, but it's only been going for less than 5 years, so they don't have that data. But they're just simply tracking that benchmark, so it's always going to be close. The difference between them and the benchmark is simply that the costs that they charge to run this portfolio. So finally, how can you buy it? Well, this ETF is listed on 4 stock exchanges. It's London, Swiss, German and Italian, so you can buy it through any of those 4. You can see on the risk gauge that they, compared to the Amundi, which is 5, these guys are 3. Bonds are usually less risky, as we've been through pretty much always than stocks, so it's always going to be lower risk. And you can see to buy each share you pay about 27 euros at the most recent price. So that's an overview of 2 funds, and you can see that they're employing this passive management by simply following what's in the index that they have decided to replicate, and they give you access by buying the shares into how those indexes perform, either these large stocks around the world, which is socially screened, or European government bonds. Thank you very much for watching, and I'll see you in the next video.